All right. Okay, so welcome to the panel, Implications of Blockchain Technology for International Business. We have three outstanding panelists joining us today. So Professor Olli Kuivalainen, Lappeenranta University of Technology, Finland, Assistant Professor Khuram Shahzad, University of Vaasa, Finland, and Professor Ilan Alon, University of Agder, Norway. And me, Aušrinė Šilenskytė, University teacher at the University of Vaasa, Finland, will serve as the chair of this panel. We would like to have this panel as interactive as possible. Thus, welcome to share your comments and questions in the chat. Right after the statements and brief exchanges, we'll be turning to the questions from the audience. So what is blockchain and why does it matter? Discussions around the adoption of blockchain technology for various types of organizations are gaining momentum. Majority of executives consider blockchain to be critical and believes this radical innovation will be on the top of their agenda in the nearest future. Blockchain technology is, in very simplified terms, is a new type of database, although others compare it to a new type of internet. In blockchain, transactions and data are stored and validated differently. Instead of having one single node executing data input and output, every participant of the blockchain has the same synchronized version of software that permits access and right to input and validate the data. Thus, if the current databases are centralized, blockchain makes the data storing decentralized. Every transaction or piece of information is placed in a separate block of information. These blocks are connected in a chain in which the previous block and the block after has the information about the block of information in the middle. When we wish to enter a new piece of information on the chain, the new block of information has to be legitimized, whether by everyone involved, what is known as a proof of work, or by randomly chosen larger investor, known as a proof of stake. Thus, once the new transaction or information input happens, the entire chain of information with the new block is sent to every participant in the blockchain. After the data has been recorded in the blockchain, it is impossible to change or alter the information in it. Now you may ask why this is important. The importance comes exactly from these technological features. Blockchain hosts information in such a way that chain becomes very hard to break, differently than centralized databases. In the era in which cybersecurity is a daily question, this is a game changer. Thus, blockchain allows creating public and private databases in which information can be entered by multiple agents, but is much safer than regular databases. Transactions can happen safely without supervision. This has been already recognized by both public and private organizations who are working on integrating blockchain in various supply chains, registries, customer bases, payment systems, bankings, and alike. Moreover, due to this availability of transparency and redefined trusts, new organizational forms emerge, such as technocracy. The form is already legal in some jurisdictions, and so multinational firms of entirely new form, without managers, without bosses, without employees, start emerging. Interestingly, the blockchain has been around for some time. The technology itself was available in the 90s. However, only with its application to Bitcoin, the first cryptocurrency, understanding of blockchain's utility spiked. Until today, blockchain is largely associated with the Bitcoin and cryptocurrencies only, and the entire set of discourses around them. Thus, in this panel, we thought of broadening horizons and making sure that we bring the topic of blockchain into the field of IB appropriately. The multinational corporations and born globals have great potential to benefit from both public open source blockchains, such as Near.org or Ethereum, as well as from the private ones created within industrial ecosystems. As an unpatented disruptive innovation, blockchain has a large potential to change business models and patterns of internationalization. Yet, there are still questions to be considered, such as to what extent these high expectations towards the blockchain technology are justified. So now, we would like to open the debate on the implications of blockchain technology for international business. And as mentioned, welcome to type your questions and comments in the chat. And now I'm happy to invite our first panelist, Olli Kuivalainen, who will discuss on the blockchain and internationalization process of the firm. So welcome, Olli, the screen is yours.
Okay, thank you. Ausrine. So yeah, my name is Olli Kuivalainen, and I promised to talk about the blockchain internationalization process. If I tell briefly about my history about the blockchain, I recall reading about quite early on. I was a bit, thinking of what's this, fuss about the Bitcoin and the cryptocurrencies. But a few years back, I ended up having a dinner in Dubai with the lady who said the university started a whole MSc program focusing on blockchain only. And then I started to think that maybe I have to dig deeper into this. And these are my instant thoughts. How could it change? How could it transform the internationalization of the companies? So my topic really is about the internationalization of the process of the firm. And when we, of course, look at the blockchain, I was thinking that what could it change, whether we can see it as a tool or mechanism to increase the international trade and internationalization of the firms alike. And of course, one of the big problems in international trade is the friction between the seller and the buyer and the middleman. And we can look at that, of course, in transaction cost perspective. And there can be lack of trust and coordination between the parties locating in different countries based on the distance and other barriers we have in relation to internationalization. And then clearly, if there's a new customer, we are lacking the trust, we're lacking the coordination. And of course, when the institutional settings are weaker, like in emerging markets, there might be less trust than if you trade in your neighboring country, for example. And in classical sense, when we think about, of course, the international trade, often internationalization start with exporting. We talk about, of course, how we get the payment. And this is from Albaum and Dewar, classic export management textbook. And just reminding you how the things been taught in the past in exporting and international marketing programs. So when export importer managed to get agreement that somebody's selling something to somebody, then of course banks used to be the parties got involved. If you didn't trust the other party, if when the wire transfer, just the invoice and somebody bakes into your bank, you contact your bank and letter of credit, different types of letter of credit was the modus operandi for many companies. When there's no trust towards the other party, when there's risk uncertainty related to the transaction. And of course the banks took the risk, but they took the certain premium from their service. And clearly this of course is the classic export procedure. So where lots of documentation taking place, and when your goods, depending on the how you agreed in the contract, when does the transfer of title take place, who is responsible of the shipment of the goods, eventually when the certain kind of information is given from the systems to your bank, then your bank releases the money to the customer's bank, and where you buy from the goods to your provider's bank, and then the goods can be and the money can be transferred. So friction, because of the problems regarding the trust, and transaction cost theory probably covers all these problems quite nicely. So classic problems, whether you trust the other party, how do you pay, depending, of course, the size of the deal, and availability of the payment methods in certain countries and industries, and of course, who has the power in the relation, who dictates how the things are going to be paid. And then if you look at the maybe most common application of the blockchain, we come down to the cryptocurrencies, and then that's one way to deal in things. How do you pay? There's one payment possibility here, but of course there's a financing possibilities out there to facilitate the transaction. And the question, of course, would I compose to the members of the panel and the audience would be whether the blockchain technologies would affect the internationalization process, and if so, how? And the basic response of my person would be that whether you adopt the technology, if you would adopt the technology, of course, and the other parties would adopt the technology, it could facilitate the smoother transactions. Then the question would be that whether the many companies are ready to adopt the technology, and some have, but I assume we're still rather early in the hype curve. Lots of people interested, but less companies use the blockchain at the moment. But of course, diffusion is taking place in the end. So clearly, blockchain does enable this from consensus and some other sources I've used to my own knowledge to modify the statements, but clearly blockchain does enable you to move from the letters of credit to tokenization of those letters of credit. So we can use the NFT non-fungible token type of thing to secure a transaction. It can be more from peer to peer. And it probably costs you less than if you the classic banks to secure the transaction. So we can talk about authenticity, verified ownership of the transaction. Of course, with digital goods, we can actually be sure that the digital good is being transferred better than if the classic brick and mortar produce tangible good, for example. So other option would be that it's more smart contracts. So you can actually sell more, add to the thing, you know what the other parties kind of used, what's been transferred. There's possibilities to manage distribution across the channels. If it's a digital product, for example, you have the more smart contracts there, and of course the whole adoption would create more possibilities regarding digitization and transparency in the parties where you do exporting, for example. So in principle, it might smoothen the first transaction. It might provide you more trust and credibility if both parties are willing to use blockchain in the transaction. And consensus examples, just to, they talk a lot about the decentralized finance, DeFi, and of course there are applications you could adopt to conduct international operations. Often it's been used for finance, but there are ways to facilitate the exporting, importing as well. And when we look at the classic export problems, if you look at the early stages of the internationalization process, of course, we have a number of the decisions we have to make, and this from late Jim Bell. So just, of course, first question is kind of the domestic or export market expansion. Of course, more distant the market is, probably more lack of trust there would be. So blockchain might enable us to overcome that kind of barrier. But clearly, if you use the blockchain, it may mean that there are more potential customers who can trust you. So it could be that you enter in the quicker pace more markets. So more like the shower type of internationalization process regarding a number of the countries, at least in the case of exporting taking place, as well as there might be that you overcome regarding the entry mode. This, of course, may enable use to more middlemen options, because sometimes if you're a small company, you're not trusted, you're small, you can't find the middleman because they don't trust you, don't think there's enough business. This might facilitate you to get them wholesale or distribute in the country if blockchain facilitates the transfer, as well as creates the trust regarding the transfer of the title and payment as well. So entry barriers might become lower if there's a diffusion of innovation regarding the blockchain taking place, and of course it may help you when you operationalize the market strategy as well. So regarding the fines, regarding the transportation, you might be able to control more how the transportation takes place. If there are lots of members in the chain, blockchain might have the benefits and is the tool to create trust for those as well. So clearly, different uses. Data monetization, one way to use that's for transformation of the money for your investments, companies investing you in the crowdfunding type, or payments coming between the parties, flowing between the parties. Or here's the one example from the Sun Exchange, was actually a company based in South Africa, and they do peer-to-peer solar leasing platforms, and they have kind of divided by using blockchain that the crowdfunders can be owning or funding one solar cell. So it hasn't been the whole panel, whole field of the panels, but it can be down to one cell, and they actually have more than members in the crowd, doing the crowdfunding in more than 180 countries at the moment, for example, and they use blockchain to do the transaction, as well as to measure the smart meters and the data exchange between the different solar cell plants they have, and they have more than 40 projects already. So this is about the energy blockchain uses. Peer-to-peer trading is the dominant one, but you do have the other things like IoT controlling between the energy providing plants, for example, and demand response. You can actually use blockchain for various purposes in the business model to do international transactions. And here it's an example, of course, that blockchain may give you less friction, and you're able to go through the entering multiple countries in a quicker pace and succession because of the adoption of the blockchain technology of all parties involved. And regarding entry modes as well, if you look at the number of theories explaining things, assuming that it could be easy to export, but as well enter the alliances, so it facilitates probably the certain entry modes better than some other kind of modes you were using in the past, for example. So that's for me. Thank you. And if you have any questions, I'm quite happy in comments, because it's quite early phase of my thinking about this.
Thank you so much, Olli. That was very insightful. And now we're very happy to invite our second panelist, so Khuram Shahzad, who will be talking about the ecosystems and emerging industrial ecosystems and how blockchain technology is helping there. So Khuram, welcome. The screen is yours.
Thank you, Aušrinė. Really nice to be here while I'm talking about the blockchain technology and emerging industrial ecosystem. So my name is Khuram Shahzad. I'm the assistant professor at University of Vaasa. A bit of my blockchain background is also that it's based on current research that I'm working on blockchain. And I'm also leading a research project which promotes blockchain in public and private sector, and how organizations go through, for example, the change process while implementing this technology. And also we focus towards the leadership competencies that are required for implementing blockchain technology. Additionally, I'm also currently running a master course, namely blockchain in supply chain and logistics. So that was a bit of my background of blockchain. So since my talk is about this technology and emerging industrial ecosystem, I would try to relate it with more international perspective. So starting from the point that we know the business world has become a global village where the value chain is connected everywhere. Along with increasing diffusion of disruptive technologies, international business environment has become more complex and uncertain. The recent enriched flow of data within an ecosystem of several interactions, driving multinational organizations to manage their operations in a way that they can create value for all. So the increasing speed of such technological developments actually demand firms to become faster at spotting these kind of changes. So the value creation and capture have become more dynamic and complex in international business context. Not just that, but also the customer demand for more complex value offerings, and technologies rapidly enable firms to engage in kind of inter-firm collaborations. We see more interdependencies, and novel forms of joint value creations are now emerging. So one form of such collaboration in industrial ecosystem, where individual actors loosely connected with each other combine their complementary values offerings into a superior joint value proposition for the customers. Such ecosystem often brings players from unrelated industries together on a global map. So now remember, although the platform technologies have often facilitated such kind of transactions among international business players, but platform owners remained powerful in that setting. So the advent of blockchain has a role here, as it can facilitate firms in the international business environment to achieve efficiency and transaction cost benefits. As blockchain is emerging quite rapidly, both business models and ecosystems are also undergoing a major transformation, which potentially offers a more democratic distribution of power among key players of ecosystem. So, and its impact on the whole ecosystem is enormous, as it has the potential not just to digitize the transactions, but also transform the whole international business grounds based on developing vibrant ecosystem of different players. Although blockchain emerged from the open source community, it rapidly attracted many stakeholders worldwide, each with different backgrounds, interests, and motives. Now let's remember that blockchain has been developed far beyond cryptocurrencies and transforming industrial ecosystems by providing a kind of transparent operational processes. Its immutable and trustful features are really driving several players such as multinational corporations, developers, startups, entrepreneurs, government and non-government organizations, and venture capitalists to invest a good amount of resources to transform the innovation processes. So the evolution has been great so far, and its application has been extended to several kind of industries such as food, supply chain and logistics, high value items like diamond industry, automotive, energy, construction, blockchain, and et cetera, et cetera. I mean, you just name it, which has enabled a substantial growth in the new blockchain-based applications. Although blockchain is still in its infancy, it's already creating a profound impact on value chains. We also need to remember that blockchain is actually helping in breaking silos among different actors in global supply chains and also making it more integrated ecosystem. The dynamic interactions among different ecosystem players can lead towards creating, capturing, and delivering values in whole supply chain that will resonate actually the better decisions. So the integrated role, its impact on emerging ecosystem, and how decentralized control, trust, transparency, and encryption are facilitating in developing new values are actually considered as most important avenues where this technology excels. Also an autonomous system of self-automated governance mechanism. Now I'm talking about the blockchain as governance mechanisms. It is actually transforming the traditional ways of governance where the conditions have been enforced through contractual or relational mechanisms. So the concepts of interdependence, expectations of partners' behavior, and judgment based on their histories are also negated by this technology as it facilitates collaboration beyond these notions of expectations and behaviors, and of course the integrity is established without any direct contact between the parties. So the industrial ecosystem can really benefit from this technology from its three kind of capabilities. One, as a resource, which means that it offers a source of objectives, reliable transparency, and a network of actors. Two, as a capability, which means that it enables the efficient transaction and minimize the cost of trust among ecosystem actors. And three, as an actor, which means that it functions as a facilitator of integrating machine agents. So therefore, the local or international actors of any ecosystem benefit from such transformative capabilities of blockchain that offers efficiency, novelty, and mutual lock-in impact and enhance their engagement in ecosystem-based forms of interfirm collaborations. Don Tapscott, the author of Blockchain Revolution, mentioned that blockchain could be used to disrupt services like Uber and Airbnb that are pure ecosystem-based businesses. I mean, if we just think about the Uber, the future of these kind of applications could be by just avoiding them and perhaps building a real sharing economy based on distributed application of blockchain. For example, if there are autonomous vehicles available and the driver just posts their info on the blockchain, and if you need to rent a car, you just post it there. The blockchain will do the rest, and the payment system is, of course, automatically built in there. And the same can go with the Airbnb. Well, such kind of system could be built by a joint efforts of small companies sitting globally and really can transform the whole business models of the companies. So these kind of ongoing discussions in the literature as well as in practice are really leading everyone to rethink how blockchain-based ecosystem will emerge and what would be the role of international players. Overall, smart firms in international business environment will work hard to participate fully in the blockchain economy and network rather than just playing its victims. In the developing world, the distribution of value creation through entrepreneurs and value participation through distributed ownership of the firms hold a key to reconciling the prosperity paradox. Thank you very much.
Khuram, thank you. This was awesome insights, really wonderful and exciting examples. Really, thank you so much. Right, and now we would like to invite our third speaker, Professor Ilan Alon, who will discuss about the Bitcoin as an international reserve currency. And of course, here we have a Bitcoin aspect. So very exciting topic where the blockchain started. Ilan, the screen is yours.
So, when we talk about blockchain, we know that ultimately the elephant in the room is Bitcoin. And in Bitcoin, is part of an ecosystem, cryptocurrencies, that as of today is worth about 1.6. It's been up to $2.3 trillion, with about 11,000 currencies, where Bitcoin employs about 40 to 60% of the total market value. So what is really Bitcoin and what role does it have to play in international business? So Bitcoin is a crypto or digital currency that is, I think, uniquely differentiated through the fact that it has no central control, such as a bank. It's a distributed ledger, and it's the most secure crypto. And because it has a proof of work and hashing, and it's probably the only non-sovereign money, depending on how you define money. And currently, as I mentioned, is about half of all that is happening in the financial overall crypto markets. So what is money, and does it qualify as money? Well, money is a storage of value, medium of exchange, and unit of account. And I've done a number of videos on YouTube. I don't want to repeat some of this basic information, but Bitcoin has all of these elements, but it doesn't really score very well on any of these elements because the storage of value fluctuates quite a lot. It's not accepted everywhere, like Visa and MasterCard and the US dollar and euro. And it's really not controlled by a central bank. So it's not exactly money, but it has some of those very same properties. I think one of the biggest criticisms of Bitcoin is the energy use. It's certainly a financial innovation. I think Kathy Wood and other investors around the world will agree. But many people have often mentioned Argentina as the reference country where Bitcoin gets more energy from the environment than even Argentina or Norway or Bangladesh or even Switzerland. And I think this is, while it might be true, has to be put into perspective. That first of all, these proof of work algorithms, that in the case of Bitcoin is the SHA-256, that are used to validate and confirm transactions, actually take a lot of energy, and that's why it's so secure. That's why Bitcoin is the most secure currency. But I mean, the second part that I think is quite important is if we compare it to the existing legacy banking systems or even the ancient storage of value like gold, Bitcoin actually scores pretty well. But when you really think about it in a 21st century way, Bitcoin really has the potential to help the green sector. For example, you can imagine that one of the biggest, two of the biggest problems, right, of green energy is that you can't transfer it and you can't store it. So sometimes where you have the energy, you can't get it to who needs the energy. Well, Bitcoin essentially allows you to scale up green energy, for example, by providing opportunities for energy that is maybe anywhere in the world be transferred into monetary energy. And the second is it can also make Bitcoin can make energy more efficient. For example, in the gas flare-ups where we just have too much energy, or in Norway, where sometimes when there is a lot of rain, there is extra energy, or Denmark, where there's a lot of wind, and we don't know what to do with it. Energy prices might even go into negative territories. So imagine if we could transfer that energy into monetary energy, that will be a better use of resources. So is Bitcoin a security? There's been a lot of talk recently, and the Howey test is used as a kind of a way to think about it. Does it involve an investment? Is there a common enterprise behind it? Is there an expectation of profit? And does profit depend on the efforts of others? And if you look at that, a lot of the cryptocurrencies, like Ethereum and others, actually do quack like a duck, look like a duck, walk like a duck. They do look like a duck. So in a sense, they look like something that should fall under the securities law and the SEC. But in Bitcoin cases, it's not as clear because it's a kind of a standalone algorithm that has picked up a lot of users. Can it be used for criminal activities? Yes, and it has, and it's very bad. But the nice thing about it is that because records are immutable, addresses of Bitcoin can actually be traced over time and see where the money is going. What are the implications to international business? Well, the multinational company should start thinking whether to carry Bitcoin as part of the reserve currency. MicroStrategy and Tesla have led the way in doing that. Can cross-border transfer of money be facilitated by Bitcoin? I connected with all these presentation of our textbooks where we show the old legacy banking system and the letters of credit. Well, now we can the cost of moving money approaches zero. But of course, it escapes regulatory oversight, which is a concern for regulators around the world. Can companies get paid in Bitcoin? Meme stock AMC just today announced that they will accept Bitcoin payments for movies. Can companies use Bitcoin to manage currency risk? Consider when the currency crashes in Turkey and Argentina and other places. How would you get your money out? Well, if you had the money in Bitcoin as opposed to a local currency, whether you're a company or an individual, you might be able to save some of the energy that you have saved up all your life in the form of money. And then, of course, probably the biggest potential for Bitcoin and other cryptocurrencies is the smart contracts. And that will revolutionize supply chain management. For example, at the moment, you can have oracles that get vital information from a variety of sources. And you can offer insurance products. You can offer opportunity to read the temperature of containers in the sea and adjust the price of the shipment based on the ability of the shipper to keep the temperatures within a certain range. And all of that can be done automatically without human intervention, creating huge efficiencies in the global economy. From our points of view as academics, we might think about some vexing theory questions. We have a whole institutional economics researchers that are looking at how institutions are meant to reduce risk by bolstering trust. Well, in some way, the concept of cryptocurrencies and Bitcoin is that we don't have to have any trust in order to be able to transact. The US dollar requires us to have trust in the central banks, keeping the monetary supply in check. In the case of Bitcoin, that doesn't need to happen because the supply is algorithmically controlled and of course limited to 21 million. Bitcoin and other cryptocurrencies are based on trustless transactions. There might be a decomposition of value-added chain. I already see on LinkedIn jobs offered in crypto ecosystem, in programming, in selling that are paid in crypto as opposed to any national currency. And then, of course, what is the reason of the firm? you know, the reason of the firm is to reduce transaction costs. Well, what if we can take the firm out of the picture and allow peer-to-peer transacting? For example, the cryptocurrency BAT allows you to get paid for watching commercials. Instead of YouTube getting paid, you get paid. And you might use that payment in order to buy video content directly from peers using another currency in crypto land. And this crypto land can have an exchange rate of different cryptocurrencies. And of course, the reserve currency of all of it is Bitcoin. Of course, we have transaction and translation risks. For example, losing the key or losing value because of very high fluctuations, or some regulatory environment that is hostile, like it is at the moment in China and Russia. And of course, governments have some control of the onboarding and offboarding from the legacy financial systems. In the United States, neither the Democrats nor the Republicans are particularly crazy about Bitcoin. But in El Salvador and Paraguay and Panama and Mexico, governments have expressed great interest in waning off the dollar influence and the central banks affecting their own currencies. This is, of course, not endorsed by IMF or the World Bank, because these institutions are based on the legacy systems where they have a lot of control. El Salvador, in particular, has made a remarkable first to market movement to adopt Bitcoin as a legal currency, and has in a way paved the way for the rest of the Latin American countries. Investment banks are driving a lot of the financial instruments, and they see the ability to benefit from a lot of this volatility by selling risk to investors. So I think that international business is going to be changed, appended by cryptocurrencies, and Bitcoin is going to lead the charge.
Thank you, Ilan. That was awesome, especially great insights on how we translate it to a theoretical sort of setting and what kind of important questions it raises for the theory. So wonderful. Thanks a million. And indeed, as you said, let's open our panel for Q&A, and I'm sure we'll have a lot of great topics to discuss.